What's going on, guys? We got to be careful right now. I'm warning you about the stock market. I'm warning you about a certain few select stocks, as well as just the general market overall. We really need to pay attention right here. One of my biggest tips right now is to sell, especially some of your losing trades. Now, I know this is counterintuitive. You're like, why would I sell what I'm down on? Well, listen up, guys. There's something called tax loss harvesting, okay? You need to really listen up to this video because it's going to change your December strategy. As we gear up into 2024, you need to make some changes right now. The biggest thing that I personally do is I cut my positions that are losing money. Now, luckily right now, my Discord community and I have actually made a lot of money. All of my positions are currently up, but I am actively looking to cut stocks which I am down. Let me explain. If you are down $10,000 on a position, you may be thinking to yourself, well, I want to make that money back. You know, in fact, you might put your computer down and be like, I'm making this money back. I'm committed to making this money back. I need it back. I don't take losses. I'm a man. I'm a strong man, or I'm a strong woman. I don't take these losses. Well, change your mind. You got to humble down a little bit. Get the ego off to the side, because at the end of the day, you want results, right? If you want results, the ego off to the side, and I'm focused on money. I'm focused on results. I don't care what other people think. I need the right results. I want to make sure that I'm making consistent passive income. And I also want to be sure that I'm being smart about my taxes and my overall financial situation. Now listen up, guys. If you have a losing position, instead of being like, I want to make the money back on this position, find other opportunities. Find other opportunities to invest in, take a loss, so that loss can actually help your taxes. It's called tax loss harvesting. Now, also, you need to be aware that you can only incur up to $3,000 by the IRS. I'm not a tax person, so don't take this as tax advice. I'm also not a financial advisor. I'm just telling you my opinion, but I've been doing this for 10 years and obviously I'm a multimillionaire. So look, I usually sell my losses no matter how big they are. Obviously, I don't want to incur too much losses, because if you're taking a $40,000 loss, you can only use $3,000, and the other $37,000 gets carried over into the next year. So it doesn't actually help you out. However, what I will say, if you have some gains, you have $40,000 of losses, go ahead and sell the gains as well, because those gains are not going to be taxable because you have some losses to offset your gains. Obviously, talk to a tax person about this. But what I'd be doing right now is I'd be selling your losses and I'd be reinvesting that cash into other companies. Find better opportunities. Heck, here's a secret. You could sell Google stock and buy Amazon stock. They're very similar. They actually move in relation to each other. There's something called correlation. These two stocks go like this together, right? It's the same thing. You know, if one property goes up in a neighborhood, probably other properties go up. That whole neighborhood goes up. That whole city goes up. People are moving to that city for a reason, right? There's usually cause and effect. That's not always the case, but with stock market, they are very correlated. So Apple and Google is very correlated. Amazon, Microsoft, all these stocks, they move in tandem. So what you can do is you can sell one stock for a very similar stock, and that way you can take advantage of tax loss harvesting without necessarily actually getting out of a position that you like. Now, let's say that you're in Tesla. Yeah, I get it. Nothing is exactly as similar as Tesla. However, you can sell Tesla and get into QQQ. Triple Q has some Tesla in it. So because QQQ has some Tesla in it, you actually have something that is similar. It's not exactly similar, but it's similar enough that, again, you're going to have that high correlation. Correlation, again, means that when one thing happens, another thing looks very similar. For example, if you're 5'10", you have a son, your son's going to be about 5'10", maybe 5'11". You're not going to expect your son to be 6'5", because you yourself are not 6'5". That's what correlation means. It's the movement of one asset in relation to the movement of another asset. Now, the market for many stocks are like a 0.8 correlation. That means there's like an 80% similarity, I guess, if you want to think about it that way. I also want to warn you that the stock market is not cheap. Just taking a look at my laptop right here, let me show you guys S&P 500. Right now, it has bounced up a lot. I mean, a lot, guys. It has been at around, you know, the 410 level. Now it's at 460 in just a couple months. Just check that out. How much changes in 2 months? You got to change your plan as well. You have to be more cautious here. Too many people, they're going to be like, you know, the market's going up, I'm going to ride this. Okay, you can ride this with some of your money, but you better start doing covered calls. And I even recommend in the money covered calls, all right? Let me show you an example right here. I made a video about this not that long ago, but what you want to do is in the money covered calls. I'll show you an example on Apple. Okay, when I talk about in the money, I mean 50 delta, 55 delta, maybe even 60 delta, because if and when the market does pull back, you want to be in a good position to not get hurt as much as the market. You want to have a margin of safety. You want to have a cushion. We no longer have Charlie Munger in this world. He passed away, but Warren Buffett, 93 years old, he talks about margin of safety. For him, it's about 15%. I was reading these books. I was going to University of Pennsylvania's library. I was reading these books. I was sitting in on classes with Jeremy Siegel, the guy on CNBC who keeps talking about different recessions and whatever. But I was taking classes and I realized you really need to have a margin of safety, because even if you're not correct, you're going to do better off than everybody else. This is a relative game, and that's why I want you to pay attention right now. In December, you need to cut certain losing positions. You need to even take profits on many of your positions, okay? Now, if the position has been around for over a year, that's considered a long-term capital gain. If you have a long-term capital gain, it's all good. That's at a favorable tax bracket. So again, you don't need to sell those positions, but short-term gains, you can offset them versus your short-term losses. Now, taking a look at Apple, this has been my biggest bet. Guys, you see all these people talking about different stocks. Those stocks go like this, like this. Tell me, what is that doing for you? What are all those stocks that you're paying attention to, all those hype stocks that go like this and this? Have you actually gotten wealthy? Have you actually made consistent results? I'm not talking about 1 month, 2 months. In the past 3 to 5 years, have you gotten wealthier off of these type of stocks? I don't think so. Cathie Wood, like this, okay? Like this. That's not what I'm interested in. I'm interested in this. I'm interested in taking a rocket ship, going out to the moon, where you have enough money and consistent income that you can live on, right? For me, I'm in Dubai. I'm going to Thailand. Then I'm going to Bali, Indonesia. I've been all over Europe. I've been to South America. Speak 3 languages. It's because of the freedom in the time that I have, I'm able to invest and not having to work. I don't have a boss. I don't have to do anything. I can focus on my personal mental state, my languages, my culture, understanding other people, spirituality, all these cool things, as well as money, right? As well as building a business. It's because I'm focused on consistency. I'm not focused on what these other YouTubers are like, let's take a look at the Fed, let's take a look at this and that in the third. I don't care about the news at all, guys. You pick a good stock, you ride it. For example, Apple, I've made videos, guys. I have 52% of my money in Apple. Take a look at 3 months, 10%. Now, 10% on 200K, 20 grand, all right? 3 months, 20 grand, that's enough to travel and do whatever you want. Now, of course, you can't live on 200 grand. I think that you need quite a bit more money. I made several videos on this channel about, needing about $305,000 to get into that retirement area. That's not fat FIRE, okay? So there's a whole community out there on the internet. It's called FIRE, Financially Independent, Retired Early. So when I talk about $305,000 being your retirement zone, I mean that's like your minimum retirement. That means like you own your house, now you're good because you don't have a high expenses, you can live off 300K. But that's not living lavishly. At $700,000 is where I personally started to just travel. Well, I quit my job before. I took a crazy risk. I don't recommend that. But at $700,000, I felt very comfortable. I felt like I could make enough option trading that I was living in Colombia at the time. And then I scaled my portfolio to 1.5 million, to 1.8 million, right? And now I'm just withdrawing money and I'm just spending it because I feel really comfortable. Obviously, I have a little bit of savings. Aside from this, you guys know, and if you don't know, please subscribe to this channel because I keep updating you about my personal situation, transparency. I talk about stocks, I talk about options, I talk about just what I'm personally doing. I've been doing this for 10 years, so I know if you're subscribed to this channel, you are gonna get richer. And being richer solves a lot of problems. Not all problems, but a lot of problems, all right? Apple, $195 per share. Been one of my biggest plays. You see right here, I bought it at 176, okay? Big bet, 52% of my portfolio, $680,000 invested in right now. And I would say, I'm doing in the money covered calls. So it's at 195.75. I have a 195 covered call. So if I take a look at this right now, you will notice that this is going to be like a 52 delta or something, 59 delta. So that is a bit of a higher delta. Now, of course, as Apple goes up, I'm not getting all the gains. I'm not. I am pretty much capped out right now. So I may be forced into rolling higher come March. But at the time being, we'll just see what happens. If the stock market pulls back, I'm going to look like a genius. And that's kind of what I'm prepared for. I've made quite a bit of money this year. I've been so blessed in 2023 financially, super, super blessed. So for me, I'm in more of a defensive state. I've been making decent money. If I look at the past 1 month, I've made around 2.91%. So I've been a little bit too hedged, but it's not a bad month, 50K. And then on the 3-month chart, 4%. So this past, couple of months, I haven't been inching out as much gains as I would like, to be honest. I'm in a great mental state now, but I wasn't in the best mental state. So I just kind of wanted to be defensive and just have like a consistent passive income. Now that, I'm just feeling so ready for the new year, I'm investing a little bit more aggressively, but still in the money covered calls. I still want to be safe because for me, it's all about safety. I want stability. I want consistency. I don't want to have any big swings. Like I can go to make this 1.7 into 2.5. I don't need it. I don't need it in the expense of a lot of risk. So I like the consistency of seeing my portfolio just slowly go up and just counting on it, just depending on this portfolio because I can trust it, right? I can trust this income. So that's what I'm saying, guys. Sell your losing positions to get those tax loss benefits. Also, be smart about it. Do some planning around that. Obviously, you don't want to sell the best stocks that are going to go up. With your gains, make sure that you can sell some of those gains so they can offset against your losses because those two things balance out. And then be in a position to do the covered calls that I always talk about in the channel. But be aware that in the money is fine. But also, for some of the better stocks like, Starbucks, we had a poor man's covered call. So also feel free to jump in to a poor man's covered call because that's how you print more money. That's how you get that aggressive growth in your portfolio. That's how you get the 5 to 10% returns per month, which is quite a lot. But again, if you have a smaller portfolio, you're doing some poor man's covered calls, you can make a killing. And that's what I was originally doing with Tesla. I was making so much money in 2021, went from 100K to 700 grand. And now I'm just being safe and consistent.